A huge drop in imports from China to the US is occurring. Hey everyone, it's Wolfgang. I wanted to cover this because a lot of people have wondered what's going on with the imports from China, that being the biggest sore point for the US in the trade imbalance situation. The US is using tariffs to try to get balanced trade from countries that sell or that import into the United States, and China is the worst offender. We have a large trade deficit with China. So, if you recall, the U.S. imposed 145% tariffs on Chinese products. On May 12th, an agreement was reached between China and the U.S. A 90-day pause was agreed to on May 12th. The tariff on Chinese imports is now dropped from 145% to 30%. So products that are being imported from China are having a tariff imposed of 30% on them as we speak. We're in this 90-day pause period that was agreed to with certain terms and conditions on May 12th. So it's been discovered by the U.S. government that China is not abiding by the May 12th agreement. They were supposed to take certain actions, and they're not complying with the May 12th agreement. There's a large decline in imports from China to the U.S. already, even with the 30%, relatively modest 30% tariff. If the U.S. decides that China is out of compliance and abandons the 90-day pause, there will be no imports from China. 145% tariff on China imports will basically stop imports from China. So at the port of Los Angeles, okay, I'm going to use this as sort of an informative, it provides a lot of information about what is going on with the import situation from China right now. Gene Soroka is the head of the Port of Los Angeles. The Port of Los Angeles, the goods that are imported there by container ships are delivered to all 435 congressional districts. This one port touches the vast majority of the United States. It's a really important port. Gene Soroka is the guy who is the head of that port, the Port of Los Angeles. And he said several things recently. First of all, he said import volumes are nowhere near where they should be for this time of year. Imports are down from China. Gene also said U.S. retailers have about 5 weeks of full inventories left. And that was as of April 30th, about a month ago. So Gene also said spot shortages could begin to appear at U.S. retailers. A spot shortage is there might be an item available, but not in all varieties, like a certain size of clothing may no longer be available. So the Port of Los Angeles is seeing significant drops in imports from China, and that's with the 30% tariff. Imagine what this is going to look like if the U.S. decides that China is not abiding and they don't want to, and the U.S. reasserts the 145% tariff. So these imports from China will just vanish. So why don't U.S. retailers sell U.S. goods? Well, the fact is many retailers have already reduced imports from China. They saw the writing on the wall. The first administration of the current government from 2016 to 2020, tariffs were used then. President Biden kept a lot of those tariffs. U.S. retailers saw the writing on the wall. They noted the trade imbalance between the U.S. and China. They noted that the U.S. government wanted to stop the trade imbalance so that fair trade was reestablished. So many retailers already reduced imports from China. TJ Maxx reduced their imports down to only 10% from China. Boot Barn, they got their imports from China all the way down to 12%. Dollar General, only 10% of the imports for Dollar General are coming from China now, only 10%. Huge declines here. Nike has reduced imports from China to 45% or less. Same with Adidas, less than 45%. So there are some retailers who have decided to adjust the level of imports from China, because here's the problem. Right now, with the state of the economy, just the other day, in fact, the video I posted yesterday, I described the slowdown in the employment scene in the U.S. There's a sort of a crack in the job market in the U.S. They're finally starting to pay attention to that anyways. Retailers cannot raise prices. If they start raising prices, people will stop shopping at them. So retailers in the U.S. Know that they cannot pass on high tariffs to U.S. customers. And so what U.S. retailers are trying to do is figure out. The fact is, the current tariffs on Chinese products is only 30%, and U.S. retailers are trying to analyze if 30%, and we're not even talking about 145%, if a 30% tariff is still profitable enough to import goods from China. A lot of these companies, it's not going to work. Companies who have not done what TJ Maxx, Boot Barn, Dollar General, Nike, and Adidas have done, companies who are still overly reliant on China for artificially cheap products, when the 30% rises, and it probably will, if China continues to not abide by that agreement, there's just no way that retailers are going to continue buying products from China. They won't be able to, because it'll be unprofitable. Number one, they can't afford to pass on the higher prices to customers right now. The economy is too weak. And number two, they cannot afford to eat the higher tariffs. They'll go out of business. They'll go bankrupt. So if the U.S., and this could happen any day. I mean, if it came out tomorrow, I would not be surprised. If the U.S. decides to announce that that China is not complying with the May 12th 90-day pause agreement, if the U.S. decides that has occurred, it's highly possible the U.S. could say, we are raising the tariff back to 145%. And overnight, any retailer who got caught sleeping and didn't take the actions these companies did, they're going to be in big trouble. If the majority of their products are from China, they are going to be in massive trouble. So the 145% tariff could easily be reinstated by the U.S. Again, the government announced that they've noticed China is not abiding by the May 12th agreement. So here are the details of the non-compliance, or the background anyways. So the tariff reduction, the 90-day pause, the tariff reduction to 30% on May 12th, it required China had to stop some non-tariff trade impediments, like the rare earth export ban. China imposed a ban on rare earth exports. They said, we're no longer going to export rare earths. They have to stop that. If they don't stop that, they're not abiding by the May 12th agreement. The U.S. said, okay, look, we're going to reduce the 145% tariff on you down to 30%, but you have to end, as an example, your export ban on your rare earth minerals. And right now, China has to continue engaging in talks to establish balanced trade, and they are not complying with that. So if you have been paying attention in the news, the Treasury Secretary, Scott Bessent, I think is his name, said that talks with China have not gone anywhere. They're not going anywhere. So those two things, rare earth exports from China and engaging in talks to establish balanced trade, are not happening. So China is out of compliance with the May 12th agreement, with the 90-day pause. So there has been some messaging that as the 30% could be increased to like 80% as a first step. Warning shot across the bow. We're raising the tariffs. You're not complying. We're not going to go to 145% immediately, but we are raising from 30 to 80%. Again, any U.S. retailer who is overly compliant on selling China products, they are going to be in massive trouble if that happens, if the tariff is increased to 80%. If you look on Polymarket, which is a prediction website, they make predictions, the current odds on Polymarket show an expectation of a tariff increase on China because of this not abiding by the May 12th agreement. Polymarket is not yet predicting a jump back all the way to 145% tariff, but there is a general consensus in the government and in the public that there is a 20 to 40% chance that the U.S. will reestablish the 145% tariff on China. 20 to 40% chance, and that could rise if China just continues to sit on its hands and not cooperate. It means they don't care about balanced trade, and the U.S. is going to have to stop trading with them. So here are some retailers who were not smart enough to do what TJ Maxx, Boot Barn, Dollar General, and the other companies did. Here are some U.S. retailers who are overly reliant on artificially cheap products from China. Walmart is one, lots of products from China. Amazon, we all know that story, and Target. Those are three of the biggies that are still overly reliant on artificially cheap products from China. So I'm not sure if you folks are aware, But you know, people ask, why are products from China so cheap, so artificially cheap? One reason, China does have a minimum wage, the highest, and it varies by region. It's not like the U.S. where it's one minimum wage for the whole country. It's regional. The minimum wage changes depending on which region or city. So the highest minimum wage in China per month is in Shanghai. $370 per month is the highest minimum wage. That is why China can export artificially cheap products. They are paying their people $370 a month. You know, it's like, get real. It's not enough. It's not enough to live on. It's not enough to raise a family. But that's how China, and China also has like 6 million slave laborers. And so China is producing artificially cheap products. That's the source of the imbalance in trade with the U.S., and the U.S. is putting a stop to it. If China does not come to their senses and start abiding by the May 12th agreement, the first step is probably going to be an 80% increase from 30% to 80%, and then back to 145% to cut off China permanently. So that's where things are right now. It begins at the Port of L.A. Gene Soroka, the head of the Port of L.A., has come out and said that there's been a huge drop in imports from China into that port. It's one of the most important ports in the country that receives imports from China. And he has come out and said retailers, as of the end of April, a month ago, retailers in the U.S. had 5 weeks or so of full inventories. And after that, if retailers cannot make a profit on a 30% tariff, then they're not going to buy Chinese products anymore. So things are coming to a head here with the trade imbalance with China. Our opinion is that China is never going to comply with balanced trade. It goes against a long-term goal they had, which was to weaken foreign countries, especially in the West, weaken the manufacturing. For example, President Biden doubled the tariffs on Chinese electric vehicles, and which basically has been keeping them out of our market. If he didn't do that, those cheap Chinese electric vehicles would be putting our car companies out of business. So where would those jobs go? They'd be in China, right? People would be buying the cars here. People would be employed in China. So that's kind of China's long-term objective. That's why I think they're not going to comply with fair trade. They have a goal. Let's eliminate all the jobs in foreign countries that are hostile to communism. I'm not being political here. I'm just being observant. But the goal is, let's eliminate the jobs base in foreign countries and bring all the jobs to China. We need them for our people. No, the U.S. needs jobs too. So does Europe. So does the United Kingdom. So does South America. We need to have balanced trade. When there is balanced trade, there is also balanced employment. Because everyone in every country needs the ability to raise a family and to have a means to make a living. China cannot take all the manufacturing and productive capacity from the world and bring it into China with $370 a month minimum wage. It's not going to work. It's already creating way too much conflict. The U.S. has not wanted to use tariffs, to try to correct the trade imbalance. It's undesirable to have to do this, but when one country is misbehaving on trade, you sort of have to stand up for yourself and say, we've already lost a lot of our job space. We have to put a stop to that. And so we're going to use tariffs as the tool to do that. So that's kind of what's happening. If you have any questions about this, I'd be more than happy to answer if you post questions in the comments. And I very much want to thank everyone for watching, and have a great day.